The IMF, the International Monetary Fund, has revised its FY26 growth projections for India by 20 basis points to 6.6%. The fund cites a strong momentum in the first quarter. However, the IMF has also warned of global overexposure to AI and said that if the expected transformative productivity gains do not materialize, it could knock the wind out of the elevated tech and AI valuations. Ritu's here with more details on what the IMF is saying on global growth, as well as the possibility of an AI financial bubble. Ritu.
The International Monetary Fund has revised India's growth outlook for the current fiscal upwards, even as the global economy remains fragile. Let's start with India, where IMF has raised the FY26 growth outlook to 6.6%, which is up 20 basis points from the July estimate. This upgrade comes on the back of a strong first quarter and a robust services sector. For FY27, the growth is expected to ease to about 6.2% as momentum begins to normalize. But globally, the outlook is far less upbeat. Global growth is expected to decline from 3.3% in 2024 to 3.2% this year, which is down 20 basis points from the July estimate, and the 2026 outlook remains unchanged at 3.1%. The fund also warns that medium-term prospects are dimming for about two-thirds of the global economy, with emerging market and poorer nations most at risk. Now, the global economy is projected to expand at an annual average pace of 3.2% between 2027 and 2030, which is a persistently lackluster performance compared with the pre-pandemic average of 3.7%. Immigration is highlighted as another aspect of recent policy shifts that can impact medium-term growth in both low-income and advanced economies. Now, under the baseline scenario, the global inflation is expected to decline to 4.2% this year and 3.7% the next. Risks to global growth outlook, however, are tilted to the downside. The main risk is that tariffs could increase further from renewed and unresolved trade tensions. Now, that coupled with supply chain disruptions could lower global output by 0.3% next year. Artificial intelligence, now that stands out as a double-edged sword. On one hand, IMF warns that a potential AI bust could rival the severity of the dot-com crash, threatening market stability and household wealth. And on the other hand, faster AI adoption can unleash powerful productivity gains, which can offer a rare upside in an otherwise subdued global growth landscape. The IMF also says right policies can make a difference. So stable trade agreements, lower tariffs, structural reforms, and smart AI adoption can raise global output by as much as 1% in the near term.
All right, Ritu, many thanks for joining us. In fact, the IMF, they're warning against global overexposure to artificial intelligence. In an interview with me just...
Hey, thank you for watching this on CNBC-TV18. Hope you liked it. For more such interesting news and updates, follow CNBC-TV18 on all the social media platforms.